Hey guys, AKIL'S here. Welcome back to another episode of the Trading Coach Podcast. Today, we are going to dissect some recent results from a trading competition and show you how there are different ways to be successful as a trader. This is going to be an eye-opener for many of you, very similar to how the Market Wizard series was an eye-opener for me, showing that the greatest traders of all time all did it in very different ways. Now, before we get too stuck in, this is a video episode, so if you're able to, make sure you head over to Spotify or maybe check this out over on YouTube. I'm going to share some cool graphics and whatnot with you, but if you're unable to do so, or perhaps you're in the car driving and you shouldn't be watching and driving at the same time, disclaimer, do not do that. I'll make sure that I walk you through everything as well. That way you aren't missing out. So, recently, TradingView did this competition called The Leap. I don't know what version of this it is, but it recently ended in December. And pretty much it was a 30-day trading competition with about 60,000 traders enrolled. So, funny story, you guys may not notice, but my trading fate changed all because of a trading competition, right? I went in there at a very young age and I kicked everyone's butt. No, just kidding. I'm actually not a fan of trading competitions. I'll tell you a little bit about that why later. But a trading competition is how I met my mentor. So during that phase where I quit 3 jobs and I was at home enjoying all this freedom and had nothing better to do than kind of peruse the internet looking for super secret system after super secret system after super secret system, I came across this article back in a magazine, right? For you guys that are younger, magazines were like documents of written words that people would read on a regular basis to be informed. There was no moving videos or pieces or stuff like I'm doing now. It was simply letters, sentences, and paragraphs. I know, crazy world, right? But in that trading magazine, I read this article from Jason Stapleton, who ended up being one of my trading mentors. And the reason I read it, or the reason I guess he got interviewed for the article, because he was in a trading competition. I think he placed 2nd or 3rd. And it was saying stuff that was cool. I didn't really know much back then as a trader. But the thing that stood out to me the most was at the very end, he talked about how he would never trade in real life the way he did in this competition, meaning that he was very aggressive. He took very high risk, right? He was still trading like a professional, but if it were his own money, he wouldn't have taken such an aggressive approach. And that was something that stood out to me because it was an honest answer. And in the world of trading and Forex specifically at the time, this is back in 2008, honesty wasn't really that frequent across the industry. So that led me to kind of finding him and talking to him, and ended up becoming my mentor and taking classes and all that fun stuff. And now I am the man you see before you. But I say that because in reading through a little bit of the rules about this trading competition, I really appreciate that TradingView did as much as possible, it seems like, to make it fair and square. So I'll give you some of the rules, right? They have rules on how much you can risk. They have rules on your trading frequency. So you can't trade too much, right? If you're loading up different scripts and trying to do like a high frequency thing where you're just shooting trade after trade after trade after trade after trade, they're going to suspend you and shut you down and give you this like pause period. On the other hand, if you're trading too little, you're going to get kicked out of the competition as well. So you can't do something like, one, you can't risk like your whole account on a single trade. 2, you can't make like if you make like a massive amount of profit on your first trade, you can't just like do nothing the rest of the 30-day period. So it's really cool to see that. There are common rules for commissions, which I think is awesome, because whenever you have a paper trading competition or paper trading in general, we forget about commissions. And as you'll see later, commissions play a massive role. They're a massive role in live trading as well. And one of those expenses that traders don't really notice or care about until it happens to them. And then they have to kind of reevaluate their whole situation. So it is good to mimic that. What else am I missing? There are rules about how many asset classes you can trade. So I think it was limited to gold, silver, Bitcoin, Ethereum, the S&P, Euro dollar, and I feel like I'm forgetting one. I think crude or oil, something like that. So it was a pretty kind of solid competition. Again, I'm not a big fan of competitions for the reason that people, if you're aspiring to be a consistently profitable trader, so let's take a step back. I'm not a fan of competitions if you are a new trader. I think a competition could be a really good idea if you're a seasoned vet. Also, a nice way to make money is there are cash rewards for this one, and a lot of people got paid. But if you're a newer trader, it's one of those things where you don't enter a competition unless you want to win a competition, right? So if you want to win a competition, you typically have to trade a certain way. For example, my trading style is not going to win any competitions, right? It is slow and boring, steady Freddy, where I consistently churn out profit, but it's like, oh, there it goes, like that, right? It's not kind of in a 30-day period, who knows what can happen. So for a newer trader, if you are adjusting your style specifically for the goal of the trading competition, what happens is it's, you may do good. And you're probably asking yourself, well, Akil, how's it bad if you do good? Well, if you do good, you may think that you can actually trade that way for the rest of your life. And now you've adapted this high risk type of trading model when you don't necessarily have the numbers to prove that it's sustainable, meaning that anything can happen in 30 days. I can get really, really hot in 30 days, right? I've been on fire for the last 2 weeks. If I stopped my trading over the last 2 weeks, right, and you looked at my P&L, you would think I was the best trader in the world, right? There is going to be a drawdown that comes after that, but that 30-day picture only takes a snapshot of knocked my own self out of my OODA loop. It only takes a brief snapshot of that bigger picture, and the worst thing you could do is kind of go with your live money, trade the same way, and end up in trouble. So if you're a newer trader, I would stay away from competitions. If you are an experienced trader, certainly a way to make some money. I've only been in one trading competition myself personally, and I never say yes to these things. I said yes because it was a friend of mine doing a podcast. It was a trading competition where, like, during a 30-minute segment, I had to place 4 trades. And it was like a day where the markets were doing nothing. And I think I went like 1 for 4. It was embarrassing. But it was like I was forced to take trades. And so I just like picked out anything. And then like on the last, after I lost the last 2, or the first 2, excuse me, I had to get high risk to try to make it up and get on top of the leaderboard. So I had this one high risk trade, and I went for a second high risk trade, and that one sunk me, and it was like, blew up in my face. And if I cared what people thought about me, I would be like, oh man, that ruined my career. But fortunately, I don't care what people think about me. Blame the markets for making me cold and soulless on the inside, right? Similar to Cole Palmer with that chippy chip the other day. Anyway, so let's talk about this competition. And what I want to do is I want to go through kind of the top 4 finishers, brag about their stats, but also highlight some things that were different. And as I mentioned in the intro, Market Wizards was a game-changing book for me because before I read it, I went in thinking that traders had to be a certain way. Every trader was exactly the same, like a robotic type of thing. And Market Wizards taught me that all these traders who are the best of the best all the time were different. And it gave me confidence that, hey, I can find the style that works for me instead of kind of forcing this square peg into a round hole. So let's take a look at the winner, right? So I want to highlight a few areas, right? Days active, 17. Days trades taken, 33, right? So 17 out of the 30 days they were active. They took 33 trades within that period. Win percentage, 82%. Really, really good win percentage. Average win, $816. Average loss, $545. Biggest win, $4,789. Largest loss, negative $1,300. Net profit, $20,904, and that is an 8.4% return on investment. Commission, $656.55. That's how much they paid in commission. So that's going to kind of be our baseline test, or our starting point. We're going to compare everything else to them because they are the winner. They are the greatest. Crown them, right? Second place, days active, 17. Very similar to the first place person, but trades taken, 16, right? So a much smaller frequency. Our winner had 33 trades during the competition. Our runner-up had half that, 16 trades. Win percentage, 87%, even higher, but around the same, both very, very high win percentages. Average win, $1,470. Biggest win, $6,757. Average loss, 0. Largest loss, 0. What? Huh? Wait a minute. Average loss, 0. What, 87%, 100 minus 87 carried 1, 13%, should be 13% losses. So this one caught me by surprise, and you might be scratching your head as well. Average loss 0, largest loss 0. Although the win percentage was 87%, this trader's losing percentage was 0. They didn't lose a single trade. So you're asking, where does that magical number comes from, right? Break even. So what does this tell me? This trader did a great job at managing risk. Obviously, I don't know the particulars of their strategy, but just by understanding the market, understanding results, it tells me that this trader had a very aggressive and a very active trade management plan, meaning that once a trade went in their favor, they were quick to roll their stops up into a position that protected them. And their main goal was, yes, I'm going to catch some big winners and whatnot, but it was don't take that loss, right? And that is a brilliant tactic. So cool thing about that trader, and commissions, $132, again, lower frequency in there. But the biggest takeaway from the second place trader was that their risk management tactics were on point. They did an excellent job in protecting their capital. This is something that I do in my trading personally. Not to this extent. I'm not that good or not that good or aggressive where my average loss is 0. But one of the biggest ways that I've made more gains and boosted my equity curve isn't by necessarily winning more, isn't necessarily by kind of shooting for higher profits. It's either reducing my losses while the trade is going in my favor or, right, preferably cutting out my losses completely by moving those stops to break even or a smaller in profit mark. So that was pretty darn cool. Trader number 3, your third place finish. Let me scroll up on my little cheat sheet here. Days active 17, so this has kind of been a theme, right? Trades taken 23, kind of right in the middle of the other two. Now, the biggest difference with this one is where the first two win percentages were in the 80s. Trader number 3, win percentage 61%, right? Now, man, how can you win a trading competition being a 60% trader, Akil? Don't you have to be 80%, 90%? This is the second time I'm doing this little dancey thing in a podcast. I don't know what it is, but I kind of like it, man, right? Anyway, this shows you don't. Many of the greatest traders of all time win between 40 and 60%, right? There is, and if you've been part of a workshop or seen the YouTube videos or the Trading Coach podcast video episodes, I've shown this graph of like the risk reward kind of, I don't know what it's called, like chart where they overlap. And you have to understand that win percentage is only part of the equation. Win percentage is only relevant to your average risk reward that you have. If you have a high win percentage, you can have a low risk reward or even an inverse risk reward. If you have a lower win percentage, you can have a high risk reward and still be profitable. So it's cool to see that. Yes, we have our 1 and 2 traders winning in the 80s, which is maybe a little bit of intimidation for you guys. We're like 80%. Oh my gosh, that's intimidating. I don't think I can do that. I can't be a trader. Man, right? Throw everything away. It's cool to see someone that is 61%. Again, that's more of my region as well. So it made me particularly happy to see that. Average win, 1,700. Average loss, negative $336. Again, that's a very small average loss. Nothing compared to the 0 person last time, but really, really good. Biggest win, 7,728. I believe that's the biggest win out of all 3. Let me just double check. 4,000, 6,000. Yep, that's the biggest win out of all 3. So again, you can see this trader's risk reward profile where their wins are big and their losses are small. I think the average win is bigger as well. Again, I'm doing this live, so I don't rehearse this stuff, but 1,700. The first one was 14 and 13. Yep. Yeah, so you can see the risk reward profile in here. The average win and biggest win is much larger than any of the other traders, and the average loss is much smaller than and the largest loss is much smaller than any of the traders aside from the 0 guy. But again, you can just see that this trader took the approach well, I'm not going to win as much, but I'm going to risk less. And when I do win, I'm going to win big, right? So that's pretty cool. Net profit, 20,200, 8.08%. I don't think I said it for the second guy. The second guy was what? 8.2% as well. So 8.4 for the winner, 8.2% return on investment for the runner-up, 8.1% for third place. Fourth place, days active, 17. So again, another fun fact, right? 30 days of competition, right? One of the things that traders tend to think about or tend to assume when they first get into trading is that I got to trade every day, right? And they're looking around, I got all these screens, right? You don't relax, woosah. You don't have to trade every day, right? None of these traders, right, have traded every day. 17 out of 30, 14 out of 30, 17 out of 30. This last person, 17 out of 30. It's not every day. They're not forcing trades. They are taking the trades when they come. If a trade doesn't come on one day, they just wait until the next day. Now, this one, trades taken, 86. So, third place finisher, 23 trades. Second place finisher, 16 trades. Winner, 33 trades. Fourth place, 86. So a much higher frequency. So even though they were trading kind of the same amount of days, right, they were executing more orders during that period. That could mean a handful of things. We won't dive too much into it, but just think a higher frequency of trades. Win percentage, 64%, similar to the third place person. Average win, 492. So third place was 1,700. Second place was 1,500. First place was 800, right? This one, 500. So a much smaller average win. Average loss, negative 167. A much smaller average loss. So what does this tell you? Well, probably a lower time frame trader, where the other traders were probably operating on a higher time frame where the frequency wasn't as much, but the risk and the reward were bigger. This trader was probably operating on a smaller time frame, getting in, getting out more quickly. Wins are going to be smaller, losses are going to be smaller as well. Again, day traders can't be successful. Day trading is a scam, blah, 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 blah. It's funny, the only people that say that are people that haven't been successful in trading. They're like, well, Akil, day trading is a scam because I haven't been able to be successful day trading. Maybe it's you! Like, you dummy? Like, it's stupid stuff. Like, do you think it might be you? Like, potentially, but just to show you that you can be successful. I don't know if they're day trading. I'm assuming they're day trading with 86 trades taken in 30 days. Back in my day trading days, that is kind of what I was doing. Not that many, but I was in like the 30s, 40s, something like that. So that would make sense. Now, here's the thing about day trading, right? We talked about the average win being smaller, the average loss being smaller. Commissions, right? This person made 8.2% as well. But commissions. No, we didn't make 8.2%. Sorry, I'm looking at I have my notes wrong. Not that this part actually matters. What did this person make? Just so I'm clear. Fourth place, they made 8.06%. Yeah, there we go. So commissions, however, right? So your first place finisher, they only paid about $650 in commission. Your second place finisher, they only paid about, where's it at? $132 in commission. Again, less frequency of trades. Your third place finisher cost them about $700 in commission. This guy or girl, trader person, $1,763 in commission. And this is what I spoke about earlier, right? The thing about paper trading usually, and I haven't paper traded in a while because I've been live for like a decade and a half now, more than a decade. Well, I'll stay young, a decade and a half. I'll keep myself young, right? I just turned 25 the other day. Yeah, right? But back in my day, when you demo traded, there were no commissions, there were no spreads, like everything just worked perfectly. So I would have my data, but then I would trade live and there'd be these other fees and it didn't make sense. And those fees chop into your return on investment. Specifically, if you're going to be a day trader, right? Because you're getting these commissions and spreads paid per trade, right? You're going to get hit with more commissions because you're more active. So although this trader traded more and had this and had that, it's actually costing them more to trade, right? Now, this is why many of the brokers want you to day trade and they sell you day trading stuff and they do stuff so you can be a high frequency trader, right? It's because when you trade more, they make more money. They know that 90% of traders are going to lose 90% of their money in the first 90 days of trading. So if we can make that happen on a lower time frame, we can take as much money as possible before you ultimately quit. So again, I'm not saying it's a bad thing. It is the cost of doing business. I was gladly a day trader. I accepted that fate, right? You can make up for it in other ways, but understand that is going to be a part of the process where you're paying per activity. The more activity you take, the more you're going to have to pay on the back end for that. And you need to be prepared for that because it does make a difference in your equity curve. So overall, I think there were over 60,000 traders that started the competition. only 59,000 finished. I wonder what happened to that final 1,000. 40% were profitable, 60% were unprofitable. And I find that number to be interesting because Mark Douglas, right, the great late Mark Douglas had this, I think it was in the Trading in the Zone book, had a hierarchy of traders kind of pyramid where you had your 10% at the top, and then that 10% could be of successful traders, right? These are traders that are making money. There's a very small percentage that are like super traders, but let's say 10% of traders are successful. Then there was that boomer buster category in the middle, which was like 30 to 40%. These are the ones where like some are profitable and some are kind of break even. You kind of bounce around between that area. And then you had your 50% at the bottom who were just like bad and they lost right away. No coincidence, this lines up just with it. 40% profitable, right? 30% of that boom and buster. There's 10% left that are maybe at the bottom and 10% at the top. 40% are profitable, 60% are not profitable. It's crazy that it lines up right with that. But the numbers have been the same forever in trading. And so it's kind of cool to see that. But the key points that I want to bring your way is kind of what I spoke about. There are different ways to be profitable. Day trading, higher time frame trading, high frequency, low frequency, high win percentage, low win percentage, big profits, small profits, aggressively trailing and managing, right? It is it's so cool to break down these numbers and see right in front of your face that you don't have to be a certain way. You don't have to be like trader A, trader B, trader C. You may be saying to yourself, well, I want to be like the winner, but remember the winner was the difference between first place and an 8.4 return on investment, and fourth place was 8.1. That's 0.03%, whatever third of a whatever number is bad. You know what it is, right? 8.4 versus 8.1. You do the math on whatever it is. It's very, 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 very small. And these are all coming from very different traders. At the end of the day, right, there are certain elements that are key in all of them, right? It's risk management and mainly understanding that your edge comes from two different places. It comes from your win percentage, it comes from your risk reward and how you orchestrate that together. And whether you're the first place finisher or the fifth place finisher, if you're doing that in a correct way, in a consistent way, you give yourself a chance to be profitable no matter what all the other moving pieces are doing. So thought it was a cool episode. Let me know what you think. If you have any questions, leave them below in the comments section. Also, if you're watching this on YouTube, check out the rest of the videos. There's thousands of full-length videos. There's also like probably nearing thousands of shorts as well. So I upload about 2 shorts every day. So make it a part of your daily habit to watch my trading short videos, or else I don't know what I'll do, but I'm gonna find out something to do to you if you don't watch, and I will know if you don't do it. So until next time, plan your trade your plan, take care.